Guys, last week was nuts. It was easily top 5 craziest week of my entire life of trading and investing. No question, probably even top 3. I mean, we crashed and exploded higher, then came crashing down, exploded higher. I mean, if you're caught on the wrong side of the equation, I mean, you would have lost your shorts, no pun intended. So it is not a situation to take lightly, right? And we are actually near the beginning of all of the madness, which I've been trying to warn and tell people about since last year, and giving some, sharing my thoughts on how I'm preparing for this stuff, right? And now that it's here, a lot of people are caught surprised by it. But if you've been listening to me and you've been following me, you would have actually made a lot of profit, just like I did, especially last week. So why don't we get to this, and let's see how I'm preparing myself for the next week. Last week was a sea of red in the beginning. I mean, we were just going down. Everybody was short the market. It seemed like it was doom and gloom. And then what happened was there was the fake news that Trump was going to postpone the tariffs for 90 days, right? And then the stock market just exploded higher, like one of the highest ever explosions upwards, right, that the stock market did. Only to then get triggered and fall back down because it was fake news. So it came crashing down again. And guess what? A couple of days later, he came out and tweeted that, yeah, it is true. He's going to postpone for 9 days, and the stock markets skyrocketed back up. I mean, it was just some crazy stuff happening. And the moves were of record levels, like top 3, top 2 type of moves in the market's history. And so it was a great opportunity to make a lot of money if you knew what you were doing, but for most people they lost a lot of money because they were whiplashed by a tweet here and there. And if you look at the volatility index, which is the VIX, it was crazy, right? Like, okay, so this was the last August when we had the Yen-mageddon, or the yen carry trade unwind, just like went up and down right away. But what happened last week was we really shot up, and we actually came crashing down after this, right? We had actually the VIX's largest loss in a single day after it opened about 60. The bar came down to down here. And that just gives you an indication of I mean, look, VIX at 60 is crazy. That now we're talking like COVID and 2007, 2008. And yen carry trade unwind, but unlike the yen carry trade, which was up and down in in an instant, we're still hovering around 40s, right? We're still around here. We are not done yet. As I said earlier, we are still in the opening innings of this, and we're not going to go straight down. I'll talk about that later. But the bottom is not here, and I'll also talk about why I believe that's the case. Now, one thing that has done well and continues to do well is gold. And, this move, I mean, this is literally a parabolic, well, it actually looks like Bitcoin's move, but compressed, I mean, over many decades, because, gold's been around for thousands of years. But if you look at this move, ever since we had that cup and handle, I mean, we just, we ended on record highs on Friday. And, if I zoom into what was going on, like we did have the initial sell-off. So let's talk about this. So I've been talking about gold discount. So if you know what I've been saying for the past year plus, I've been saying get gold, buy physical gold if you can. I bought kilograms of it and I store it in a vault here, in a max security vault here in Singapore, which doesn't tax you on gold, which is great. And I was saying like, hey, there's going to be a discount window, because what's going to happen, like we saw in multiple earlier episodes, like for example, in 2007 and 8, when we had the financial crisis, there was a huge crash. And what happened after that was everybody had to raise cash, right? They had to raise cash so that to sell money of things that were performing well, and that included gold, because the margin calls came in. And so as a result of that, people just sold a lot of gold. Gold prices went down. That was a great time to buy gold, because then it skyrocketed almost 100% after that. And so we kind of saw that the beginning phases of that last week and into this week in the beginning, where basically, it went down by quite a lot because people had to raise cash because stock markets were crashing because of all the tariff news, and so gold went down along with everything else. But then what's interesting, and this should give you a signal, is it ended really quickly and abruptly and just skyrocketed upwards, right? And this is not something I recall seeing in 07, 08. We just continued to meander. We didn't make new all-time highs, right? After that steep correction, we meandered and meandered down. But here we just broke off and made new all-time highs. And that's an indication of the crisis that we're facing. It's different than before, right? Where gold was still being sold off. Now we're in a situation where people initially sold gold off, but they didn't want to sell it anymore because it's too safe. Like, it's the last thing that's gonna, it's the last thing that's gonna save their butts, basically, right? So they don't want to get rid of gold, and people just came in the moment there's that small discount, like I said, discount window. People just came in and bought it up, right? So that's different, and that tells you the gravity of the situation we're in this time around compared to 07, 08, where they still continue to sell gold because they thought, the financial world actually wasn't going to end, so they kept selling it because they felt it was okay to sell. But no, not this time, right? They sold it, and then boom, it just went up. People just buying it for a safe haven asset, right? And guess what? They were selling, treasuries, the other thing that was a safe haven. See, in the safe haven world, or tier 1 assets as defined, you have very safe things such as the dollar and U.S. treasuries. Basically, it's the government of the United States, right? So that's not going to blow up, you would think. And so those are considered some of the most safe assets you can have a flight to safety to. And gold would be included in that as well. But what we're seeing now is dollar and treasuries and bonds collapsing, right? Collapsing while gold continues to go up. And that tells you that those other two are not anymore safe haven assets according to the world, right? The world has spoken, and it has said gold is the safe haven asset, not anymore the US dollar and not anymore the US treasuries and bonds, right? And it's not a shock, right? Look at what the policies that are going on with the United States. People are losing confidence in the US and its status as a safe haven asset in the instruments that it provides in the financial markets to the world, namely its currency, the reserve currency still, the dollar, and the US treasuries, the government's, bonds, basically. Look, I don't know, right? We could have another discount window, a bigger one, and it would be an even greater time to buy, but the fact that we had a little blip down for margin call because of what happened, and then it just shot right back up and it killed the old highs and created new. To me, I don't know, man. These discount windows are going to be very short-lived on some crazy trip up it's going, right? And make no mistake, we are still early in this rise. And if you look at this kind of a parabolic rise over here, it's off this chart, right? We're probably going to head a lot higher than what we see in this chart. Now, I was talking about how the treasuries, basically the 10-year US Treasury, which is like one of the gold standards of a safe haven asset, has basically been falling, right? And here's a chart that's showing it in multiple currencies, right? The 10-year Treasury just collapsing, right? Collapsing. Any currency you put it into, it's going down. And there's a lot of speculation as to what's going on. So the initial knee-jerk speculation is, oh, China's selling U.S. bonds, its cachet of $700–800 billion of U.S. treasuries that it has, and is selling it, dumping it because of the tariff and trade wars are going on, and she's trying to stick it to, Trump that way, and using as a leverage, right, in potential negotiations and jockeying. And that might be true, right? It's hard to categorically deny that or confirm it because there's no that official data is not there, right? And so it's kind of like, well, kind of think so. Logically, you would think so, but it's not just that, right? Because what was also happening, and this is why the thumbnail of this video is playing with fire, is there's a lot of unintended consequences with all this jockeying with the tariffs and trade potential wars, right? And it triggered the stock market off, which then triggered margin calls, which then triggered basically what they call the basis trade unwind. And that is basically the hedge funds using interest swaps over the treasury interest and making money off that, right? That's what the basis trade. I mean, you don't have, look, it sounds complicated jargon and all that, but basically hedge funds and a bunch of banks and funds took this trade where, basically interest rate swaps were, over the U.S. Treasury yields and making money off of that. So a lot of money levered, also leveraged like 20x on average, according to a study I read, right? It was a 20x average believed to be leverage on this basis trade money-making scheme that these large institutions were and that blew up on them, right? Because of the margin call. And so this is the thing, right? What blew up was, instead of them selling more and more gold, like I showed you earlier, they started to sell U.S. Treasuries to raise cash, which is different, right? They were selling what was supposedly a safe haven asset and has been a safe haven asset for many decades. The U.S. Treasury, they were selling that to raise cash and pay the margin call, right? And keep their gold and not sell their gold, right? That is, if there's one message to take away in this episode, it's that. Why are they selling what is traditionally a safe haven asset in the U.S. Treasury and not selling gold to raise cash when they're forced to liquidate because some stop call was hit on their basis trade for these huge institutional and fund managers? Why? I just told you why, right? It's different this time. And what's different is, the U.S., it's not anymore considered a safe haven. That's just the bottom line. That's just the world and the market categorically illustrating that fact to you right there through the pricing of these investment instruments. So now that we've established this crashing of, so this is an unintended financial accident that has happened, right? And the Fed is kind of saying, unlike the Chinese, where the Chinese central bank has stepped in and propped up the stock market, the Fed, and we know Jay Powell hates Trump. they don't like each other at all. And he's just kind of like dragging and not really, he's like, oh, if there is something we can step in, but, we don't see anything yet. And, the latest headline is Jamie Dimon from JP Morgan saying to basically the Fed that we have a liquidity issue here. It's a systemic risk that could blow up in our faces. You need to do something. So that's happening actually as I speak over the weekend, right? It's like, what are you going to do, Fed? Like, this is not a good situation. The other thing that's not a good situation is basically, oh yeah, so this is the swaps that I was talking about, right? Like, whenever it's negative, it's not good. And let me zoom out of here. So it's -40 is already not good. This is telling you for many years now that a recession is coming. Basically, when you're negative, it's foretelling. It's a leading indicator that a recession is coming. We'll talk about the recession in a bit. But it just collapsed, right? This is an accident, right? There's a liquidity crunch that's happening as I speak right now. Make no mistake about it. The other thing that is also crunching and dying is the United States dollar, right? So dollar billing sold off. I mean, we haven't reached this level since what, 2023? Like, it broke 100, right? It broke 100. It rebounded on Friday, but it broke 100, and that's not a good sign. And again, the dollar is a flight to safety asset normally, right? Dollar goes up when there's a crisis, but we haven't seen it, right? This is not what's going on. And I bring up this chart that I believe this is the Financial Times, but they bring up a good point. They're highly correlated, right? Yields for the Treasury and the dollar high, but look at what's going on here, dude. This is a complete like you don't see that. They're completely broken, right? And going in the opposite direction. Clearly something is broken. The internals of the market have a very, very big problem going on right now. And the result of this is a liquidity crunch and a liquidity issue. And, again, financial jargon, whatever, just to explain it to, my Labrador Retriever, basically you got an engine, you got oil. You need oil to run the engine. The oil is what you call liquidity. The engine is what you call the markets. No oil, engine explodes. No liquidity, market explodes. Same thing. and basically we have this liquidity crunch. Like there's no oil in the engine. This is what happened in 07, 08, right? They had to, that's when the start of whole QE started. And so the Fed is kind of playing chicken right now. So the US is playing chicken with China, and then within the US, the Fed's playing chicken with Washington. There's like different levels of chicken going on right now, basically, right? But Jay Powell's going to have to do QE. He's going to have to do it. And this is not about lowering interest rates. I mean, that's whatever. That's not going to solve the liquidity issue. He's going to have to do QE to solve and protect against the immediate potential heart attack problem of no oil in the engine, and trying to, just grease the engine so that at least it doesn't abruptly end or stop, right? And continues, right? That's what it needs to do. And I think that is probably coming, right? The way things are going and the way markets are so dislocated right now in ways that are not normal. Let's talk a little bit about recession. Now, I've been telling you that there is definitely coming a recession. We're actually may already be in a recession. They've just been papered over with the labor market, and they say this and then they revise downwards, and a lot of government spending. So that it's all government jobs and government projects and government generated growth, but really is outside the government. I mean, is the economy shrinking or growing? And people are not faring well, right? And that's why Trump was elected by such a huge margin. And this is basically an interesting chart I came across from Goldman, actually. And once in a while they have some interesting stuff. And this one tells you, and basically, if it's under zero, which it always is here in this chart, basically it's saying that at the current state of the market, it isn't priced for a recession, meaning the market is not pricing in a recession. And if a recession were to happen, this is the delta that the markets would need to price in, depending on, what the setup is, right? Growth factor, growth shock, or alternate growth shock. But whichever one you want to pick, we are not priced in, right? By quite a lot of basis points, right? We're talking up to 100 here in some cases. And so that tells you that, look, even though, and this is after we had that, crash, right? So the point here is, this is probably the second shoe to drop, which is that everybody wakes up to the reality that we're already in a recession, or we're definitely going to be having a recession, and they're going to have to price things, accordingly. And that, I believe, is the second shoe that's going to drop in some, within this year. It's going to happen, right? And that's going to just take us down, to new lows. That's why I don't think the low is, and I'll show some data as to why. One of the things I forgot to mention, and I'm just adding it here to the video because it is important, is that, look, I don't think the bottom is in, because if you look at this table of basically the largest daily percentage gains in the market in history, right? In history, you'll see that we have essentially the top 10, 11 because there's a tie here, that we had the second largest gain in a day ever, right? Ever, just last week. And here's the thing. Every single other one of these instances, right? The other, I guess in this case, 10 instances, if you include the tie, were not the bottom of the downward cycle of that point in time in the market. In other words, a much lower low happened after these largest daily percentage gains, right? Every single, it's a 10 for 10. So because we are here, right, chances are the bottom has not been put in. And so for that reason, along with a bunch of other reasons, but this is another one of those reasons why I believe that we're going to have a lower low coming up, and that this bear market is actually just getting started. We may have a financial crisis here with the liquidity issue, with basis trade blow up. That could happen. If we manage to stave that off, I still think another financial crisis, unintended consequences, right? You don't know what's going to happen when you're playing with fire. Something could blow up, right? Like Archegos, like stuff blows up, right? SVB. We could have one of those, right? But then fundamentally, we will have the other shoe dropping, which is the recession, right? Which is not a mechanical financial market thing, but a fundamental shrinkage of the economy. And it could be stagflation, depending on what the Fed does down the years. And if they really screw up, it could turn into a depression with the huge amount of national debt that the U.S. basically is nursing at the moment. So last week, I created this Discord server about a month ago now. It'll be a month on Monday. And in the past 4 weeks, basically, I started just sharing all of my trading strategies and thoughts, and then like the actual follow through of those trading thoughts and ideas. I would post like exactly how much I bought and sold, exactly when, and how much money I made. And since I started, right, I've made a total of 9 trades, right? Every single one of those 9 trades in the past 4 weeks, and the past 4 weeks is crazy, right? Like up and down, were winners. All 9 trades generated profits, and I made over $65,000 in the past 4 weeks in profits, right? And that's compared to how much I started with, a huge percent increase, right? And so I've done really well. And the whole point of the Discord there is to share with people the real-time thoughts I'm doing and I'm taking. Look, there's a lot of people talking about this going to happen, that going to happen, blah, 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 see I was right, and all that. But very few of them actually show you like what they're doing as they're doing, so that you can't fool them, and then show you how much money they either made or lost, right? Not too many people back up the talk with what they're saying when doing and making money. And I'm trying to do that to show you that like what I'm saying and doing has made money for me, right? So if you have that knowledge with you, and you can decide what to do with that knowledge, and hopefully you make the right choices yourself with your own decisions, and you make money as well. And the Discord community has grown, and I mean, we're over 300, we're approaching 400 people now in the past, just a month of, I mean, in the beginning it was just like 10 people, right? Now it's like, we're approaching 400. And it's growing quite a bit. And I think people find it helpful because they get inside information about how I'm thinking about the markets, right? Not insider info, but inside my head about how I'm thinking about the markets. And people contribute there too, right? It's actually kind of awesome. So to those from the Discord community watching this, shout out to you guys for helping it grow and turning it into a community. And for anybody out there who doesn't know or hasn't joined yet, I highly encourage you to join and take a look at it. You probably won't leave. Now, let's talk about what I'm going to be doing next week. Look, everybody, you've seen this chart, right? This is a very well-studied and well-discussed chart. And I think we're here. I think we're going to try and do this, right? We're going to try to float upwards and make this basically a bull trap. People are going to think, oh, return to normal, new all-time highs. I think we've begun that process. I think we've put in an interim, we have put an interim bottom here, and that we're going to be doing this. So I'm writing this up, right? I'm writing this up, and I have indicators, some of them proprietary and secret indicators. You guys on the server know what I'm talking about, to help me figure out when this turn will happen. And I'll share this one chart with you. I'll share this one chart with you so you can see it. But basically, in the past couple of weeks, we had this double bottom over here, which I called out to the community, and I said, look, that looks like we're going to make a bottom there, and we're going to go up, and we did, right? And this huge spike was when Trump came out. Well, Trump didn't come out, but there was a fake news that came out that he was going to delay, and boom, we went up like one of the most ever in the stock market history, right? Then it was fake news, it came down, and then it meandered up, and then it got near to do a double top up here, and then came all the way down. But it did not make a new low, so this is important. Instead, what it did, it made a slightly higher high and did another slightly higher high double bottom. And then Trump said officially in its Truth Social post that we were going to delay it. That, exploded really high, and then, and then it came back down and it defended it here, and now it ended Friday and up. So this pattern is just a very simple double bottom pattern. We had a double bottom within a double bottom, right? And so this W shape is a W. So basically, the middle part of the W is usually where you come back down after you break out over here. Usually what you want to see is you want to come back down and test the previous middle part of the W to see if that holds. If it doesn't hold, then the W pattern is broken, and you could go down and who knows, make new lows. If this holds, right, and so what was resistance becomes support, and you bounce off of that, which it looks like we did, in the hourly, then, you know, we're probably going to go test the previous high, the right side of W, and chances are we're going to break above it. And so that's what I'm kind of thinking is going to happen next week. I think that's going to happen, and I'm holding long TQQQ, which is levered long NASDAQ positions over the weekend, thinking that we're probably going to go over here. And for me, it was, it's a good risk reward, considering that I made so much cash the last week. I've got a lot of buffer, so, putting a little bit down to take this trade is where I'm currently at, and I'm looking here. Now, that doesn't mean I think we're going to make a new all-time high. No, I do not. Like I said here, I think we're going to just make this little like bull trap over here before, we come back down, possibly come back down because the financial crisis from this basis trade hits home, or some other thing like that happens. Who knows, right? With this news driven, but I've been able to navigate and make no losses actually in the past month of market chaos. Using the strategies and technical analysis and fundamental analysis that I've been sharing online on Discord. So, hopefully that continues to go. But look, guys, and I haven't even talked about my, most of my money, right? This trading account is just like funny money. Like it can go to zero, I'm fine, right? And so like, that's why I don't do any margins or options on this, because it's sandboxed, right? I don't want it to ever go negative, or me having to pay more than what I've put into this trading. It's my, my trading account, basically. That can go to zero and I'll be okay, right? But the vast majority of my assets are in gold, and, gold has just continued to skyrocket. And, to me, it's not an investment, it's protection of my purchasing power, and also of stability in general. And that thing has skyrocketed, right? So I'm able to take increase my risk. That's why I was long on TQQQ over the weekend, because I am sitting on quite a lot of profits at this point in the game. And there's going to be a lot more to come, And if any of you got gold because of all the stuff I've been saying about gold over the past years, and not only my Substack posts, but also in my videos and whatnot, congratulations to you. And for those of you on the server on Discord who've also made, and I know some people made a lot of money too last week. I mean, I forgot, there's one of you guys, you know who you are, he came out of like a procedure, still like on anesthesia, and like look at it, it's like, oh yeah, tens and tens of thousands of dollars. I thought that story was kind of cool. But anyway, let's see what the next week brings, and I'll look forward to seeing you in the next episode as we navigate this crazy, crazy markets. Peace.